Okay, another thing that has to do with your revenues are bad debts. If you remember from accounting, we had to write off bad debts when it's a standard in business. Some people are not going to pay you if you allow people credit. So when that happens, when someone becomes uncollectible, in this case, you are going to click the refunds and credits button, which sounds a little weird, but this is how it works. We're going to choose a customer that has become uncollectible. In this case, it's going to be Babcock's Music Shop. And now in the item column here, that's where the important information goes, because we are actually going to choose the bad debt expense account. That is the account that is going to be used to make this into a bad debt. And it comes up with a warning. It says this is an expense account, because normally you don't use expense accounts here. So we click OK. Yes, we are going to use that expense account. And then we would put the amount that we are writing off here, which is $550. And then we hit save and close there. And notice it comes up with the available credit window, asking you how do you want to deal with this amount. We want to apply it to an invoice, so we're going to click OK there. And an invoice pops up. There is an invoice, and it was all the way back in January. So we have, that's one reason they are being written off here. And it is for $550. So we're going to hit done there. Now that is how you apply or create a bad debt. We can go and look at our chart of accounts, and if you scroll down and find the bad debt expense, we can click on that account, and notice it comes up and it shows the credit memo that we created for Babcock as for $550 as a bad debt expense. And if we open up the original invoice for the Babcock's Music Shop, notice it says paid, even though it wasn't paid, but their balance is zero because we had to write that off as a bad debt.